Hi, and welcome to the Profit Playbook, the podcast for business owners looking to improve profit and cash in the bank. Today's episode is all about R&D tax relief, which is a game changer for businesses which are innovating. It can massively reduce your corporation tax liability and even potentially give you a tax rebate. So to help us navigate this complicated area, I'm joined by Adam Park of Zest R&D, who's an R&D tax specialist. So Adam, welcome to the show.
Thanks for having me, Scott.
So let's just start off with the basics. Can you tell the viewers exactly what R&D is?
Sure. So at a very high level, R&D is a government program to support companies that are innovating. Effectively, what it does is it rewards companies that are doing research and development. Research and development being, and we'll get into the details of exactly how it's defined, but at a high level, companies that are designing new products, processes or services, and in doing so they're creating some kind of technical advance. And the R&D tax relief program rewards companies for doing that by giving them corporation tax discounts, or if they're not paying corporation tax, then cash rebates.
That's great. So it sounds quite involved. Who exactly can this apply to?
So effectively only UK-based limited companies can apply. So any company that's paying or liable to pay corporation tax could claim R&D tax relief, which probably kind of flows naturally to the two different schemes, because there's now a scheme for companies that aren't paying corporation tax, that are loss-making and are spending 30% or more of their expenditure on research and development. If you fall under that category, you would be able to claim the Enhanced R&D Intensive Support Scheme, or ERIS. Otherwise, you'd be claiming the Research and Development Expenditure Credit. So ERIS for loss-making companies is more generous, whereas RDEC is slightly less generous, but is open to anyone who's performing R&D.
So that sounds really confusing. There's a lot to take in there, really. Has it always been this way?
So that's a good question. It has very recently changed. So from 1st of April 2024, these two new schemes, the kind of the primary leading schemes that companies can use for tax relief claims prior to 1st of April 2024 for R&D, there would be an R&D tax credit scheme, which a lot of people might be familiar with, which would apply to SMEs and would effectively make them appear more loss-making, and they will be able to surrender that loss for a payable tax credit. And there would also be RDEC, which would have only applied to large companies. Now you've got this, as I mentioned earlier, you've got RDEC, which applies to all companies, SMEs and large companies, and you've got the ERIS, which applies to just companies that are loss-making and spend more than 30% of their expenditure on R&D. So it's a pretty big change at the moment, but it's simplified it from the sense that most companies are going to be claiming RDEC going forward.
Okay, so there's obviously been a lot of change recently. So tax credits being the old version for most small businesses, and RDEC becoming the new norm, really. Are there any major differences between those two that clients and viewers ought to be aware of?
Yeah, absolutely. So the main difference really is RDEC, which is obviously the new scheme that's being used will be used by most companies, is an above the line credit. So it'll show on your accounts, which is obviously beneficial from a R&D planning perspective, because you'll be able to see the credit you're getting related to the R&D that you're performing, and it'll help businesses and stakeholders make decisions around how much budget to allocate to research and development. So the way RDEC will work is you'll get a 20% credit for the eligible R&D costs, and then that credit will then be taxed. So after a 25% tax rate, you'll get back 15% of your spend on R&D, either as a reduction in corporation tax or as a payable cash sum. Previously, R&D tax credits would have all been done in your tax computations and tax returns. It would effectively have made you look more loss-making, and then you would have got a payable tax credit based on the size of your R&D spend.
So Adam, that's great to know. But what actually counts towards R&D tax credits then?
So in terms of what you can claim for, there's a definition in terms of what qualifies as R&D. It's defined by the Department of Business, Energy and Industrial Strategy, or the BEIS guidelines, as people call them. At a high level, so you can claim for work where you've developed new products, processes or services, or improved existing ones. But you need to have created an advance in science or technology. That's really the critical guideline. And the way they assess whether you've created an advance in science or technology is by effectively within your project or consulting to your project, you need to have what they call a competent professional. So that's an expert in that field of science or technology. And they need to effectively say that the work you've done or the product you've developed or the process you've come up with has advanced the knowledge in that particular field. And by creating that advance and the work that you've undertaken to create that advance, you've conducted R&D.
So Alan, it's quite interesting what you said there about competent professional. Can you give us an idea of what a competent professional would actually be?
Yeah, sure. So there's no strict definition of competent professional, but there's some guidelines that HMRC give you. So one of the main things you're looking for is someone that's got qualifying education, so qualifications, university degrees, PhDs, those kind of things that are relevant to the subject of your R&D. They've got significant, number of years experience, and they've also got a proven track record of delivering, results in that scientific or technical area, or potentially a publishing history if it's more of an academic area. So those are the kind of key areas you'd be looking at. So maybe to tie that in with some potential R&D projects, and I'm always reticent to give R&D examples because the devil's always in the detail, and what qualifies as R&D now might not qualify as R&D in a year's time because that knowledge will already be established. Yes, but some areas we've seen R&D, obviously successful R&D claims. You can look at industries such as agriculture. We've seen successful claims for dairy farms that have advanced the technological knowledge around farm management practices and feeding practices. Oh, yeah, cool. Yeah, things like establishing lower protein diets, and all the work and trials that you need to do to understand how to get those proteins to the lowest possible level, whilst minimizing the impact on the the performance of your herd. You might be able to claim R&D for that. Obviously, yeah, and obviously in terms of competent professional, there you'd be looking at someone that's got significant experience in dairy cow nutrition. So like a nutritional consultant, someone at the forefront of that industry will be the kind of person you need as a competent professional to establish that what you've done is to advance the technology in the area. Similarly, you might be able to claim for an engineering company that are developing kind of control systems for if there's a big kind of chemicals manufacturing plant with kind of legacy equipment that you don't have good control systems for. For electrical engineers that are able to understand those systems and perform the R&D required to create new interfaces with them. That might be an eligible project depending on the circumstances. And so that the competent professional there would be the electrical engineer, as long as they've got, they're at the forefront of the knowledge in that industry. And similarly, software is another area where you see a lot of R&D claims. So, if you're pushing boundaries in terms of what's technically possible with software, one of the areas we had successful claims for recently is in facial recognition. Cool. Yeah, and developing technologies that are able to rival existing kind of patented facial recognition technologies. Wow. And obviously to do that, you're going to need a competent professional that's an expert in that area. So someone that's got significant education and experience in developing and improving facial recognition technology. But I like I say, a resident to give examples because you can claim R&D tax credits for any industry, and your competent professional could be coming from any area as long as they're an expert in their field of science or technology.
That's awesome. There's some really great examples in there. Now I've heard there's a lot of changes around in how HMRC is enforcing R&D tax credit relief as well. Could you just explain a little bit more about some of the changes that businesses would probably expect?
Yeah, no problem. So R&D tax relief is administered with a check now, pay later policy. So effectively, when they receive your R&D tax relief claim, they'll pay now, check later. So when they receive your R&D tax relief claim, they'll pay out the sum due to you and then check the claim. And if there's an issue, they might ask to investigate your claim in a bit more detail. Now, over the last 20 years that R&D tax relief has been a thing, there's been a kind of an uptick in fraud. And so obviously HMRC are now increasing the number of compliance checks, whereas previously there might have been, a low risk of compliance check. At the moment, about 1 in 5 claims is going through a compliance check. Obviously, from a practical perspective, what that means from clients is when they submit their claim and they provide the relevant claim documentation that states what they've done and why it qualifies, as R&D, it's more important now than ever that documentation is really clear in terms of what you've actually done and why it actually meets the qualifying criteria in the BIS guidelines around what the technical advance is, who the competent professional is, and all those sorts of things. And in doing that, you're reducing the risk of being caught up in this new increase in compliance checks, and you're going to make the claims process a lot easier for yourself.
Yeah, so there's obviously a lot of area to go wrong here, isn't there? Which is clearly having someone like yourself on board is going to pay dividends for any business owner. So if a company was thinking about trying to embark on this process, what steps would they be looking to take?
It's a good question. So I suppose you kind of break that down into 2 areas. The first is kind of before you start your project. Effectively, there's some new guidelines actually around what you can do to make sure you're likely to pass any compliance checks a little bit more easily or be considered more favourably by HMRC. And one of the key takeaways from that is planning at the outset of your project what R&D you're going to conduct, why you're going to conduct it, and who the competent professional is. So if you're at the outset of an R&D project, it literally could be an email that says, we want to investigate X, Y, and Z. Our competent professionals, Scott, and the steps we're going to take is, prototype this, test that, and then finalise the R&D project. And the costs are going to be, these time costs and these, project costs. So doing that really helps secure, your viability in terms of the claim from HMRC's perspective.
So much more planning involved now then.
Yeah, and it's not mandatory, but it is really helpful in terms of making sure you're more likely to pass the muster of a compliance check. Obviously, then after the R&D project, the way R&D tax relief works is you claim at the end of the accounting period in which the work was conducted. So after your R&D project, after the accounting period year ends, when you're pulling together your accounts and your tax return for that project, you'd effectively assess how much cost was involved with that R&D project, and then pull together documentation around what the steps you took were, what the advance was, and what the uncertainties you've resolved are. Obviously, the more of that you can document at the time, the better. But effectively, that's when you need to submit it, is after your accounting period year end, when you're submitting your corporation tax returns. And the final thing, a new bit of legislation around if you're not currently claiming R&D tax relief, so if it's your first claim, you need to submit a claim notification form before you claim. So if you are claiming for your year end December 2025, say, before June 2025, you need to submit a claim notification form to allow you to submit your R&D tax relief claim. If you don't do that, you're going to be barred from claiming. So that's a really important step that's literally just come in around making sure you're eligible to claim for first-time claimants.
Thanks, Ad. There's a lot of steps in there. So can companies claim for work they've already done?
Yeah, absolutely. So effectively, you can claim for for work that you've conducted up to 2 years after the end of the accounting period. There is a slight change about to come in where you'll need to notify HMRC of your intent to claim within 6 months of the end of the accounting period, but that isn't technically putting the claim in. So it will be a process of notifying HMRC of your intent to claim if you haven't been claiming within the last 2 years. And then you can claim within 2 years at the end of the accounting period.
Just for the viewers, could you give us a bit of an example of a potential company going through an R&D claim?
Yeah, absolutely. So if we imagine a company that's looking at claiming or looking at an R&D project now, so say we'll work through an actual R&D example. So say they are designing a camera, for example, and they've identified that the shutter on the camera, everything else doesn't require R&D, but to get the right shutter speed, they need to perform some kind of R&D, some kind of testing and prototyping. So at the start of that project, before they even start, doing any work on that, what they should do is send an email within the company that says, right, we've identified when we're developing our new camera, to get the right shutter speeds, we're going to need to do this type of prototyping and these type of trials, and test that we're getting the results that we want. The expert's going to be our lead technical engineer, Joe Bloggs, and we're going to run it over 3 months, and the costs are going to be X, Y, Z. They don't need to be accurate in advance, but just a bit of an outline of what you might be looking at. So if they were doing that, and their accounting period was the end of March 2025, let's say, and they completed the project before March 2025, effectively what they would need to look to do is before September 2025, because it's their first ever claim, they would need to submit a claim notification form. They could do that at any time before they've even started their R&D project, but all it is just a short form that says we're intending to start some R&D. We're going to put a claim in for the year ending March 2025. This is our expert, and you submit it, and that effectively gives you the right then to claim for up to 2 years after the end of the accounting period in March 2025. Then the actual claim process, effectively what you need to do is submit two main things. There's an additional information form, which is a kind of a form that gives all the information in the format that HMRC wants it. So it'll say exactly the number of projects you've done, why they qualify as being a technical advance, the type of work you've done, and a few other questions. So you'll submit that form. And in addition to that, you'll also submit your corporation tax return, as you would do normally. But you'll also input the amount you spent on your R&D, the credit you're looking to claim, and all of that other information into your corporation tax return. And those two bits of information will enable HMRC to, check, verify your claim, and also to pay you the cash sum, either as a cash sum, like if you're not paying corporation tax, or as a reduction in your corporation tax bill. And there you go, Bob's your uncle. It's as easy as that. You're a successful R&D claimant.
That's an awesome example. It kind of ties in everything, really, doesn't it? Maybe not so easy, but are there any other schemes that companies developing products and services should be considering?
Yeah, absolutely. So I suppose you've obviously got grant funding, which can help support companies that are developing new products and services. Okay. But in terms of from a tax perspective, one of the most powerful and really underused schemes at the moment is Patent Box. Yeah. To claim it, you need to have a patent, which is obviously a slight, a barrier to entry. Yeah. But when you have a patent and you're making profit from a patented technology, that enables you to claim Patent Box, which gives you corporation tax relief on the profits from that patented that patented product. So that takes your corporation tax rate down from 25% to 10%. Wow, yeah, massive. Yeah. So for companies that are successfully producing a patented product, there's really significant tax relief available for them there, and quite a few of them actually aren't aware of it and aren't claiming it at the moment.
So Alan, we've covered a lot of ground today, but for the listeners who want to know a bit more about the specifics of the scheme or potential ways of claiming, where can they go?
So you can go to our website, which is zest.tax, or probably easier is you can get in touch with me, just an initial conversation. I can quite quickly tell most companies whether what they're doing is going to be, claimable from an R&D tax relief perspective, what their options are, and obviously they can take forward then, how they want to proceed with it. We offer full R&D tax relief service in terms of helping people from the start of their claim to their finish, or we can just offer more of an advisory service with specific parts of it if that's what they're looking for.
Thanks, Adam. We'll put all your company details below just in case anybody wants to get in touch.
Amazing. Thanks for having me, Scott.
Thanks everyone for listening. Don't forget to download our ebook and like, share and subscribe. And if there's anything else you want us to cover on another episode, please leave a comment below.